Hey, what's up, guys? Trust everyone's doing good. Right now it's I think it's 1:15. Date is the 23rd, and I've been getting a lot of questions, a lot of pressing questions, it seems, regarding the Nasdaq 100. Right. So today I just decided to put together a quick video answering some of these questions, as is usually typical of me when I have something that I can't, wait till the following morning or till the following session. So I'll upload this. You can get the details of everything I'll be speaking about in the description below on the video. Okay, so firstly, you need to understand what a stock index is, right? So because the NAS 100, right, or the US Tech 100, or the NASDAQ 100 is basically an index that measures the stock market, or sort of like a subset or industry. It basically helps us to compare current price with past prices. Okay. Now, basically, what would happen in an index is that, for example, in the NASDAQ 100, the top 100 non-financial companies compiled or put together to make one composite index, where you can trade that one index as opposed to trading 100 different equity stocks. And you can basically achieve more or less the same. Now, the nice and neat thing about this is that as soon as a company falls off the list, right, so you always sort of like have the best top 100 or the top 500 or the top 10, the top 40 companies in that particular sector, right? Because as soon as a company goes bankrupt, right, instead of that dropping the equity, or rather the index itself, okay, it gets pumped off. Right? So you always have the top picks of whatever sector that you are looking at. So in the non-financial markets, right, in the non-financial stock markets, okay, the NASDAQ 100 would be sort of like the premium. Okay, as the name suggests, NASDAQ, it was obviously from the NASDAQ stock market. So there is a lot of hype regarding the NASDAQ 100. Okay, some justified, some not so, because with a lot of reward, right, with the reward being there, okay, and the increased volatility of a particular market, that means there's an increase, obviously, in the probability of you losing money quicker, right? The quicker you can make money, the quicker you can also lose money. So you have to still take the necessary precautions in order for you to be safe and keep your money, your initial deposit at least, out of harm's way. Okay, so if you get a general bias of how an index would perform, this is typically how it would look in an economy that is doing great, right? So when the economy is doing good, typically you're going to get this sort of movement from an index, right? So as soon as the market obviously goes into a recessionary stage, you can see the dip 2007 and probably about 2008. Okay, right. I'm going to start here. Boom, there's 2007. That's when we got our drop, and throughout 2008. Okay, and probably a bit of 2009 before market started to correct itself, right, and continue edging higher. And we had a bit of a dip probably around 2015. 2015, we had a bit of a correction, and 2018, okay, I think around the 1st of October or so, we had a bit of a correction there. And obviously, at the beginning of this year, I mean, 2020 has just been rough, especially on the market. We did get also quite a huge price drop. So if you're looking at relative price drop, I mean, this was massive. Okay. So in comparison to all these other ones, because this is all just 1 or 2 months. Okay, so basically it's like 2 months worth of drop, and it's encapsulated in, or it's that the magnitude of the drop is all encapsulated in about 2 monthly candles. So it was actually quite a rough 2 months, but obviously we do see the recovery. Okay, it does seem like the market is in a recovery stage. So there are quite a few techniques. I've shown a few techniques myself and strategies that you can use to sort of like um, make money consistently in the Nasdaq, right? So one strategy focuses just on buying because, as you can see, I mean, if you can catch the retracements, right? If you can learn to time the market really well, you can make a lot of money on the upside. Not so much on the downside when it comes to long-term trading, right? But on the upside, I mean, you can see that there's a lot of opportunity in that sphere. And the other one was more of a signal generator, right? Because it just looks at the momentum, right? So we're looking at momentum, and it helps us to sort of like have an idea, or rather to take advantage of sort of like the meat of the trend, right? So we're not looking for the high, we're not looking for the low, we're just looking for the middle or the meat of the trend for us to sort of take advantage of. Okay. So I won't be doing those sort of strategies right now because obviously I've already done them, but we will be looking at some technical tools that you can use also with the NASDAQ in order for you to make better trading decisions. Definitely one would be support and resistance, right? So just basically using a support or resistance can actually help you identify and execute much more proficiently. Now, you can use a normal horizontal line, boom, right, and mark off, let's say, a particular resistance point. So let's just isolate this as our resistance point here. This was the high of about 2 weeks ago, okay, the week of 6th of April. You can see a price retracement. Price goes back up to that same level. The price was 82.95. Okay, and the following week you had a break above the previous week's high, right? You can see from there, market started to skyrocket to the upside before retracing yesterday, okay, before retracing yesterday, and then pulling away from that level. Now, if you're looking at this, right, you will recognize that, I mean, this is a very common pattern, even with currency. Okay, not something that's unique just to the Nasdaq 100, but even to currency. You want to see a clean break, for example, above a resistance or support level, okay, and you'll see the market just sort of like run away from there. Okay, so that's very common, and also an opportunity for us to take advantage of. Okay, so that's the basic and most simplest application of the support and resistance concept. And you can use that along with something obviously to filter out a lot of the noise that you're obviously going to get with trading any market. You can make that strategy work. Okay, now another tool you can use, let me just jump to the 4-hour time frame rather. So another tool you can use is the trend line. Okay, trend line can help us to identify where the general trend is going. Okay, so where the general trend direction is heading. Okay, all right, so we can see now on the Nasdaq 100 4-hour time frame that we are, right, so it just tells us that we are in an uptrend. Right, so we'll be looking at buying, for example, when the price dips back into that trend line, right, and you get some sort of confirmation at that level for us to start buying up again. Okay, this is just an example, right? You can also use the trend line to create a channel, okay? And you can trade inside the channel itself, right? So when price reaches the extended highs, okay, you might extend this and make a ray, for example. Okay, boom. All right, and on the flip side, you can also do the same thing and make this array. And once we have this sort of path drawn out, then we expect the price, right? Won't always do what we expect it to, but what we'd like to see is the price pushed to the upper levels, right? We checked off that trend line, right? So let's say price would be 93 even, okay? And then rebound again to these lower levels, and then we'll be looking at buying up again, obviously with some sort of way of confirming the signal itself. And same thing would apply once the price reaches that resistance on the trend line. So those are all the things that we can take into account when we sort of like make a trading decision, or we need tools that are going to help us make a trading decision when we are trading the Nasdaq. Okay. The third one would probably be the moving average, right? You can throw in your 50-day moving average. You can throw in a 200 moving average or 21-day. I've seen people use a 21-day. It all really just depends on the time frame that you are using. Okay, and a clean break above one of these levels can signify a significant shift in momentum, right? Or a cross of two moving averages, sort of like something like this, could signify to us a significant shift in momentum. So from the downside through to the upside, okay, you won't really get those exact early signals or where the price is turning, but using the moving average as a filter, you can capture a lot of the trend, right? You won't catch everything, okay? And you may leave some money on the table if you get out, let's say, here when the price crosses down, okay? And then you'll leave a lot of money because obviously you could have gotten out somewhere here at these highs, but you had to wait for this cross to get out, okay? So all this money from here to there, okay, you lost out on. But I mean, if you're looking at this initial cross over here, you would have still had a really, really, really good month either way. So as I usually say, use what's comfortable for you, right? If that or if what I've explained right now works for you, or if one of the tools appeals more to you than the others, then by all means you can take that particular tool and use that tool as opposed to using all three of them. Okay. If you do already have a strategy, so if you already have a strategy that you are using, that you are confident in, then all you need to do is do some back testing, right, on the NASDAQ 100. Not only the NASDAQ 100, you can also do some back testing on, let's say, the German DAX. Right, so you can trade the German DAX. You can look at the FTSE. Right, so these are all indices that you can watch and test out any ideas or any trading systems that you'd like to test them out. Because it also gets you in the frame of mind of being a person who tests systems, right? Back test as well as forward test before they apply them to markets. Because if you don't back test at all, it's very unlikely that you'll have a lot of confidence in that trading system. And without confidence in a trading system, you'll always be chopping and changing. So if you already have a trading system, perfect. If you don't, right, I will leave a link in the description below. Okay, so if you need a trading strategy, you can click on the link in the description below. It's going to take you through to our chat. We'll be able to help you regarding that. But if you do, hey, make sure that you watch some of the other videos in order to like find something that will work better with whatever strategy that you are currently using. And if you enjoyed the video, please ensure that you like, okay, you subscribe to the channel, right, just to help the channel keep growing. I mean, we are growing, right, at a much faster pace than I originally thought it would, but that's all thanks to guys liking the videos, sharing the videos, and also commenting. So if you have any questions, anything you need me to answer for you, right, by all means, I like to think that I know everything, but I don't. So if I don't know the answer to it, I will tell you as well. So you can also join our Telegram channel, right? Just click on the link. I'll leave that below in the description. And I do hope you enjoy the rest of the evening. Cheers.